Hi, I'm Rixandra. Welcome to our 10th session of the Investment Readiness program regarding exit strategies. This is a very controversial question, and we are going to present here in this session why and how to go about it. So, first of all, you are barely building a business and already thinking about exit. Like, are you passionate about your business? Why should you think about selling? And is it good to think about an exit strategy instead of focusing on your business? Maybe 5 to 10 years from now, what you're going to put in your exit strategy now, it's going to be total fiction. So does it make sense to put it in here? And also investors usually, they are looking for visionary people, especially in the field of social entrepreneurship. So talking about who you are going to sell to, that makes you be more like a mercenary and person that is in for the money. So it might be bad if you are proactively presenting in your investor's deck a slide with your exit strategy, like this one. If an investor sees this one, he might think, am I convinced by the entrepreneur that presents it? Is he for the long run here or just for the money? So that's one side. But on the other hand, investors put in money in your company, and of course they want to see their money back. Otherwise, it's not an investment, it's a grant. So exit strategies are mostly for the investors, to show that they have a way to get a return on their investment. So you should have a strategy at least for them. So there are different types of exit strategies, and I'm going to show you some of them. There are many more, but these are the most likely ones. And the most common one is acquisition. What does it mean? This means that the company is acquiring your venture, and it is probably for a strategic reason. It might be that they get a broadened client access, or that they get synergies from costs, or simply that they remain relevant in the market. For example, Facebook bought Instagram because Facebook had a mobile problem and Instagram was very good on mobile. Okay, so this is with the acquisition. Then we have the financial buyer. So this happens if your venture is making so much money that you're generating a lot of cash flow. They can get their money back through dividends. And then the last possibility is the IPO. So you become a public company, and this one is probably the least likely one because it means you need to grow really substantially. Well, now that we have the different exit strategies in mind, how do you present it and how do you go about it with the investors? It is important for them to see that you have a general strategy in mind and that you are structured so that they can gain the trust that they can put and invest the money in your company. So I'm going to present you some of the questions that investors are asking themselves when they are looking at ventures they would like to acquire. So of course, the first question is if the founders have identified specific companies interested in buying your venture. And then the other question is if they know why these companies would be interested in acquiring the venture and what the acquiring company might pay for acquiring the venture. So once you have these questions in mind, you can think about 3 categories of companies that might be interested in, and then put specific names of these companies in these categories. And if we go back to our initial slide I initially presented, you can see here they have identified 3 categories. The first category is companies competing in the mobile space, and they name Google, Apple, and Microsoft. And then another category is service providers and hardware manufacturers like Verizon, AT&T, HTC, or payment processors, Visa, eBay, American Express. So the slide is not bad in itself. The problem is that they have proactively put it there in their slide deck. So my advice would be, you don't do it proactively, you don't include it in your slide deck, but you have clear idea in your mind, and you're not shocked if potential investors ask you this question. And you should answer with passion that you're in for the long term for your startup. But you should also be reasonable and include some ideas on how the investors at least could get an exit at a certain point to get their return on investment. That's it for today. Many thanks. Have a great one.